Just want to say hello and welcome, and thank you for coming today. As many of you know, Bloomberg New Energy Finance is a research firm focused specifically on the energy sector. And we are extremely proud today to be releasing this Factbook focusing on sustainable energy technologies, which was very kindly underwritten by the Business Council on sustainable energy. I'm going to, without further ado, I'm going to hand it over to Lisa to give you a quick introduction, and then you're going to hear from my colleague, Michelle DeCapua, who's going to give you the heart of the report. And then after that, we'll have a panel session to discuss some of the findings.
Again, my name's Lisa Jacobson. I'm the president of the Business Council for Sustainable Energy. We're just thrilled to have you, and I want to thank Bloomberg and Bloomberg New Energy Finance for hosting this event today. It's great to be in your space. Very briefly, I just wanted to note two very important milestones that are happening today. First is, the primary reason why many of you are here. It's because of the launch of the Sustainable Energy in America Factbook. This is a really unique resource we hope is going to be very helpful to investors and policymakers alike. It provides real-time, accurate information in a new and fresh way for the sectors that the Council represents: renewable energy, energy efficiency, and natural gas. So on your tables, you'll see some of our quick highlight brochures. I want to point you to the landing page for all the materials, the full Factbook, all 100 pages of it. The slide deck that you're going to see from Michelle is also up there, and our infographic, which is also on your table. So hopefully all a one-stop shop for you with everything you need to know about the Factbook. The Factbook wouldn't be possible without the support of council members that supported both our anniversary, which is the second milestone of the day, which I'll talk about in a moment, and the Factbook itself and the actual work product and all the activities around our launch. So yeah, I just want to quickly call out our sponsors: American Gas Association, American Wind Energy Association, Center for Environmental Innovation in Roofing, First Solar, Fuel Cell Energy, Ingersoll Rand, Johnson Controls, the North American Insulation Manufacturers Association of America, Northern California Power Agency, the Polyiso Insulation Manufacturers Association, Sempra Energy, Solar Turbines, and Sacramento Municipal Utility District. And many of them are around the room, so I want to give them a round of applause. Thank you all for your support. And before I just give you a high-level overview of the program, I just wanted to say a few words about the Council's anniversary. The Council is not a new organization. We've been around for 2 decades, and what binds natural gas, renewable energy, and energy efficiency industries together is the commitment to secure, reliable, clean energy in the United States and around the world. Our mission is to promote policies here at home and abroad to expand markets for clean energy technologies, and we believe firmly in a diverse portfolio. Those benefit our economy, the environment, and customers and businesses here at home and around the world. So with that, let me tell you a little bit about our program today. We are going to hear from Michelle DeCapua, head of North American Analysis. Michelle, yeah, there you go. And then we're going to have an industry panel, and all of these bios are with the program that was given to you when you came in. So we look forward to an excellent discussion, and then turning the tables and getting questions from all of you around the room. We really look forward to your feedback on the Factbook itself, as well as questions for the panelists that will be before you. So with that, I'll turn it over to Michelle. Thank you very much.
Thank you, Lisa. I think we can start off, Ethan. And I'm going to start with 4 facts. The first fact has to do with how much energy we're actually using as a country. You can see here that over the last 5 years, the GDP for the country has grown by 3%, and over that same amount of time, total energy use for the country has decreased by 6%, 6.4%, which suggests that we're moving towards a more energy efficient economy. Yeah. Second fact has to do with what kind of energy or what kind of fuels are we actually using to power that energy. In the case of electricity, you see the drop-off of fuels such as coal and oil, and the incredible ramp-up of fuels such as gas and renewables. Actually, in April of 2012, for the first time in U.S. history, gas generation actually equaled coal generation. It's a tiny bit of an exaggeration. Gas generation was 99.9% of coal generation, but just kind of a really remarkable year for gas. Renewables, similar story, going from 8% 5 years ago, we're now at 12% of total electricity. Next story is kind of focusing on renewables, just what a kind of a remarkable rise it's been for renewables in the course of just these past 5 years. In 2008, we've doubled renewable non-hydropower renewable capacity, 2008 2012, from 43 gigawatts to 86 gigawatts, and especially kind of this past year with 13.2 gigawatts of wind installed. By any measure, actually by any non-Chinese measure, just an amazing year for wind build. 3.2 gigawatts for solar, and so now we're kind of at a point where renewables are kind of growing at a pretty tremendous rate. And the last kind of these four facts that I wanted to start with is the story about emissions, which is in some ways is kind of like the punchline for a lot of the stories that we're talking about with this fact book. We have basically seen a pretty serious reduction in energy-related CO2 emissions, 13% drop-off since 2007. We're now at the lowest levels of energy-related CO2 emissions since 1994. And so a lot of the stories that we kind of build up in the fact book lead up to this final story. So what is the fact book? Fact book it's a 90-page document which tries to provide market intelligence for the sectors that are covered by the Business Council of Sustainable Energy. The focus is renewables, natural gas, energy efficiency, and advanced transportation. In some places, the fact book is filling in holes where data is difficult to get. In other places, the fact book is bringing you up to speed to the most current real-time numbers available. And in the case of renewables, we tend to say that if you're using information that's kind of been published in 2011, for example, to try to get your hands around renewable costs, that's too old. And potentially using information from July 2012, that's also too old. So a lot of what this fact book is trying to do is kind of give that latest snapshot of costs. So now let's get into the findings a little bit more depth. The first has to do with how the U.S. produces energy. We talked about these to some extent. The doubling of non-hydro renewable capacity, we're now at 85 gigawatts. Natural gas-fired generation, now basically, as of 2012, representing a third of U.S. electricity, and that's come largely at the expense of coal. And the cost for a lot of these technologies is kind of, really declined rapidly. In the case of wind, from 9 cents per kilowatt hour to 8 cents per kilowatt hour from 2009 to 2012. In the case of solar, just even more impressive, 31 cents to 14 cents per kilowatt hour. That is without subsidies. Those numbers are without subsidies. So if you start to include the impact of subsidies, in the case of the U.S., we're talking about tax incentives. You might be talking about renewable energy credits where they're applicable. Then it becomes even more competitive. Renewables become even more competitive. Right. And then the other set of stories has to do with kind of how we consume energy. How we consume energy related to transport or related to buildings, for example. We mentioned earlier total energy use falling by 6% over the period of the last 5 years. Commercial building energy intensity decreasing by 40% since 30 years ago. Smart grid spending peaking at $4.3 billion last year, with a big part of that having to do with U.S. government stimulus. Transportation, we'll kind of show some charts later on that kind of just show the ramp up of these new alternative vehicles. And even natural gas use in the transport sector, still relatively small, but growing very quickly, especially kind of among bus and truck fleets. So those were a lot of kind of high-level kind of findings from the report. Some of that is in the executive summary that you have before you. What I'm going to do now is I'm going to kind of present some snapshots from throughout the report, and I'm going to present them in the way that the report itself is actually ordered, which is the report is ordered by sectors, and then within each sector we have a section on policy, on deployment, on kind of incremental capacity and cumulative capacity. We have a section on economics. We have a section on financing. Okay, everyone on board? Great. So starting off with the policy section, just to kind of give you, again, some of these snapshots. Policy in the case of renewables, kind of what's been so critical here has been the tax programs. The investment tax credit, especially for solar, the production tax credit for geothermal, biomass, hydro, wind, and then also the accelerated depreciation programs, which in some points were even, throughout the kind of government stimulus period, were even more decisive, which even allowing 100% accelerated depreciation in the first year. So these are very important incentives to the U.S. renewables industry. People complain about tax equity, but this is what we have to work with. This is what's politically viable in this country, and they've kind of been very important programs for these sectors. Another example of policy, perhaps a little bit more obscure, comes from the world of buildings. So here is some policies, some standards that have been set with respect to thermal performance, so-called insulation for buildings. And you see that, for residential and commercial, you see the standards that have been increasing over time, standards that existed in 2004, 2006, that have continuously gotten more stringent by 2012, or kind of what's expected in 2013. The standards in this case are measured in what's called R values, the kind of the resistance to heat. But there's many other kind of examples of standards tightening. And this is just from one climate zone in the country, but the climate zone referring to kind of a particular type of, a region in the country. Washington, D.C., for example, is climate zone 5, so that's what applies here. But different climate zones have kind of also experienced these increase in standards. And so throughout the report, we try to spell out what have been the important policies that have driven change in the sectors. On the point of deployment, you saw some of the numbers earlier around renewable deployment. We also tried to capture deployment of sectors that are perhaps less reported on. So here we have CHP, combined heat and power, representing 80 gigawatts in this country currently. You see the breakout here by the type of use and then by the type of fuel. And stories like CHP will become kind of increasingly relevant when we kind of start talking about issues related to grid reliability. And we'll talk about that towards the end of my talk. Another story in deployment is energy storage. Energy storage it has the potential to be kind of truly disruptive for the sector. It changes a lot. It changes the economics of a lot of the different kind of surrounding sectors. But for now, what industry relies on in terms of storage is largely pumped hydro. You can kind of see the ramp up there. We're now at 22 gigawatts of pumped hydro, which represents basically 99% of storage capacity in this country. What is the other 1%? It's basically non-hydro alternative technologies. And so you see some examples here, compressed air energy storage, lithium-ion batteries, and some others. The one that has the most installed capacity right now is what's called compressed air energy storage. But the projects that are right now in the pipeline, we don't think that a lot of them are going to materialize. The ones that kind of are really kind of showing some progress has been lithium-ion batteries, where kind of U.S. companies have been some of the ones that have driven technology improvements and cost reductions. That hasn't been without risk. A company like A123 has been behind this lithium-ion trend, and they faced bankruptcy late last year. So you see a sector that's kind of making pretty tremendous headway, bringing down costs, bringing up deployment, but sometimes that comes with risk and with public scrutiny. Is everyone following so far? Everyone? Yeah, a lot of interesting stories. I know that we're going pretty quickly, but wherever there's kind of interest in going in more depth, we have panelists, we have questions, we have a 90-page report, obviously. The energy efficiency story. By now we're at a point that there's 3 billion square feet of office buildings that are now EPA that have kind of Energy Star certification. And kind of look at the penetration in, for example, offices that are more than 100,000 square feet of space, we're at 30% penetration of Energy Star certification. That's one story. The other story is perhaps kind of like the lack of penetration in so many other sectors. So while it's ramped up tremendously to the point of kind of being at 3 billion square feet now, obviously there's a huge amount of potential that could potentially be tapped into. Another story on the deployment front is kind of general primary energy use for buildings. There's a lot has to do with kind of the heating of buildings, and you see there kind of this remarkable improvement in efficiency of buildings. Bear in mind, that natural gas is one of the most efficient ways of delivering energy to end users. There's a statistic that 92% of the energy produced at the wellhead is ultimately delivered to the consumers in the case of natural gas. In the case of coal, that metric is at 32%. So a very remarkable way of delivering energy, a very efficient way. Yeah. And last on the deployment front, we talked a little bit about the growth of hybrids, EVs. You see the numbers here on a monthly basis. In total, in 2012, the sales of these types of vehicles was just a little less than 500,000 vehicles that were sold, which now represents 3% of U.S. passenger vehicle sales. Those numbers are impressive. They're not quite at the levels that maybe kind of these car manufacturers were anticipating when they kind of put the original growth projections out for EVs, but they have been ramping up very quickly, and probably kind of will just see faster and faster take up next year. Now we get into the story of economics, and probably the headline chart in economics is this chart that we produce every quarter. It's called the levelized cost of electricity. The x-axis, the units in the x-axis is dollars per megawatt hour. And the way to read this chart is to look at all these technologies. We're now kind of capturing 26 technologies. Look for the triangle. And the triangle basically orients you into what we kind of consider to be the central case for the economics of these technologies. All these numbers are without subsidies. And then the bands basically kind of show the low end and the high end. Just to go a little bit into our methodology with this, all of these numbers, the capital cost that we use, we don't make them up. They're actually based on actual projects that have been financed. And so using that as our benchmark, we can start to kind of pinpoint where our projects are getting financed today. The low end tend to be, low and the high end tend to be different parts of the world. So these are global numbers, and it really kind of depends on what the availability factors are, what the cost of debt is, what the cost of capital is in that particular country, and that basically sets up our extreme. So you could produce a US-specific version of this chart, which would have some slight variations. But the important kind of facts to note are to kind of see how these, a lot of these renewable technologies are still, in general, still slightly more expensive than fossil-fired electricity. But since we produce this chart each quarter, we've been able to kind of track the movement. And the movement has basically inevitably been a movement leftwards, meaning they get increasingly competitive with fossil-fired power. And to pick out probably like the most stunning example, we have the case of solar. Here we're just showing the capex of solar. This is a global number. This is the best in class that you can get. We're showing 73 cents per watt for module costs. A typical global number is probably closer to 79 cents, 80 cents. But this is basically the best you can get. Look at the decline in inverter costs from 30 cents to very close to 10 cents at the end of 2012. And so this is the drop off that people kind of talk about when they kind of say that solar has been plummeting so much, and why it's so outdated to start using numbers that are a year or 2 years old. On the point of financing, we try to look at each sector's what kind of the financing raise has been in the case of each sector. Here we basically look at kind of how much utility financing has been going on in the case of natural gas and energy efficiency. Energy efficiency, if you look at electric efficiency and natural gas efficiency, it's $7 billion, another $1.3 billion for electric load control. That's still not the entire universe of energy efficiency financing. We probably estimate the energy efficiency financing was at $14.5 billion in 2010. In 2011, the numbers will probably be a little bit higher. In 2012, we don't know the numbers yet. But this is kind of the tracking that we try to do. We do this with the help of ACEEE and with the American Gas Association and others. Natural gas, again, this is just financing by utilities into natural gas assets. So assets like pipelines, compressors, meters. To take a step back and kind of show the entire financing picture for the U.S., this is the numbers that Bloomberg New Energy Finance compiles. We compile them every quarter, and then basically kind of provide a yearly roundup to kind of show where the investment flows are. And the number to fixate on is new investment at $44 billion. What goes into that? It includes venture capital and private equity. Those numbers seem relatively small, but bear in mind the U.S. is by far the leader in terms of venture capital, private equity financing of clean technologies. It also includes our estimates for corporate and government R&D, as well as our estimates for small distributed capacity. And then we also have our numbers for asset financing. And this is always, year on year, this is the biggest contribution to total clean energy investment. What is asset financing? It's the equity, the debt, the tax equity that goes into funding the actual build out of U.S. projects. Wind farms, solar projects, geothermal projects, biofuels plants. And the asset finance number here was $23 billion last year. And you kind of sum up all those numbers, you're at $44 billion. It's a big industry. And the story now to make is that in the past it's actually been even bigger. So we show what kind of like the trends have been. You see this $44 billion number again repeated here, and it's relatively consistent with kind of how much the U.S. has been financing since 2007. And bear in mind, to kind of get to these numbers each year, since the cost per megawatt is falling, you need to be installing more megawatts each year to kind of stay at the same levels. But what about this amazing surge in 2011? It's $65 billion. The report doesn't provide forecasts. The report is meant to kind of be a snapshot, an updating of what's happening in the sector today. We stayed away from doing any kind of modeling, forecasting, projecting. it's still safe to say that it might be a while before we get back up to the 2011 numbers of $65 billion of clean energy investment. What happened in 2011? There was the expiration of key programs, the Treasury Cash Grant Program, the Department of Energy Loan Guarantee Program, as well as kind of the expectation that production tax credit was potentially going to lapse in the following year. So there was a kind of a big surge in investing in 2011 in anticipation of these programs potentially ending. But still 2012, with these programs effectively done, with kind of like the last wave of PTC financing for that round of PTC occurring, we still saw $44 billion invested in the US. And now we go into just a couple of themes, and with this we'll wrap it up. Some themes that come out in the report towards the end, we do some comparisons across countries. You see the US, the contributions from gas and renewable, which have been inching upwards. This is a huge, huge sector. We're talking about 1,000 gigawatts of installed capacity for the US, and the fact that we're actually making a dent in that this is basically the big story of the report. But you can kind of put that story in the context of other economies. China, there really is no country that's growing as fast as China in terms of new renewables that are being installed. This year will probably be the first year that China installs more solar than any other country. That's already been the case in the case of wind. Canada, a country that if you include, and since we include large hydro as part of the renewables mix, you see that Canada is effectively already a very lean, carbon efficient fleet. And then Germany, you see just the rise there from 51% to 67%, largely driven by cumulative solar installations in that country. Another theme in the report has to do with the cost of capital. We spoke about, not to confuse the points, capital cost versus the cost of capital. We spoke about the capital cost of a solar project coming down, but perhaps equally important is the actual kind of the cost of financing. And here, all we've done, we've kept every single input constant, and the only thing we varied is the expectation that the investor wants for the project. And when we do our typical cost analysis, we pick 10% as a typical kind of investor's equity hurdle rate. But if you move that equity hurdle rate up or down, let's say you're kind of private equity or venture capital, or if you move that cost of capital down towards the world of integrated utilities, you can kind of see the effect that has on the levelized cost of energy of these technologies. Does that make sense? Great. And finally, the last story, and potentially kind of the most, the one that's kind of most pressing and probably hits close to home, in the case of a lot of businesses, is the point about reliability and resilience. And you saw in the fall kind of what it means to have a grid that's so dependent on kind of centralized power where there isn't flexibility or reliability. And this is kind of what's so interesting about these technologies that we're talking about in the Factbook. Distributed generation technologies like CHP, which can provide that flexibility to try to meet the challenge of reliability. And the challenge of reliability, if anything, is only going to get more pressing as coal retirements start to come online. So we're now talking about 60 gigawatts of coal being retired by the end of the decade. Coal, whatever you might say about kind of the emissions profile of coal, still provides important baseload reliability to the grid. And so what happens when that goes away? And the thrust of part of this Factbook is to suggest that maybe the flexibility offered by these technologies will help meet that challenge. And distributed generation can be a part of that. And probably what's so tantalizing about smart grid is the way in which it can help the entire sector address that challenge. The fact that smart grid can kind of dispatch, when needed, it can dispatch demand resource capacity, demand response capacity, or that it can draw on renewables or respond to the fact that renewables are intermittent and have natural gas peakers come online. So these are some of the stories that we tried to pull out in the report. I'll draw it to a close here, and we're going to turn it over to a panel. But again, thank you to everybody. Obviously, much more depth in the report, and our big thanks to the Business Council of Sustainable Energy.